Hi, good morning everyone, and welcome to yet another episode of Let's Talk About Market. So Nifty, we are not seeing much trend. In the past couple of days, basically it has been very volatile. But many of the key levels that were mentioned, they are still intact. So we need to see how things play out. Uh, Okay, I think I got a message from the team that the audio is not. Just give me a minute. Hello. Okay, just got the confirmation. Even y'all can please mention if y'all are able to hear me properly. Okay. Uh, Great. I got the confirmation from the team. So, so let's go. Yeah. So let me quickly share my screen. So if we see the Nifty index, basically, we are not seeing much direction as such at this point of time. But there are some interesting things that are happening, and I'll highlight you that as we go along. But see, one thing that we had spoken about is that the Nifty index is in this channel. Okay, due to the Trump tariff and so on. We saw that panic yesterday, but towards the lower end of the channel, it recovered, and in fact, it even broke above the previous high. Now, actually, the battle is at the higher level. I mean, at higher levels, it is not sustaining, and that is not, really a good sign. Uh, to see the momentum pick up, basically, this is like the medium term resistance zone, that we need to break on the upside. That's where eventually we'll see a strong momentum coming back. But at this point of time, we might just be consolidating, going sideways, and that is what is going on now. People who are observing daily swing, okay, I mean, over there is something interesting happening, and many of y'all might have this question, right? That market has done nothing, then why the swing is going up? I mean, many of you might have this question. So, the the idea over here is that let me just show you the daily chart. So, what we are doing is that we are measuring the value of RMI as compared to the previous day, right? So you can see that the market has gone sideways, but the momentum has now started to pick up, which means uh, there is a possibility that 1 or 2 days of up move, and you will end up seeing the RMI in buy despite it being at the lower level. Okay, I mean, this is also happening in, say, Bank Nifty. You can see that there is a momentum turn up that we have seen. So basically, that is what is getting reflected in the stock, because many of the stock, they might not be rising higher, but now they are not falling. And because the prior move was a decline, okay, so even a flattish to sideways kind of move can then lead to momentum picking up, and that is what it is getting reflected in the daily swing. Okay, in fact, even the average swing has started to turn up a bit, despite market still being at lower levels. So this is the sign that at least the downfall that we had been seeing in the stocks, at least those are getting arrested, and we are starting to see some momentum on the upside. Uh, so that is the explanation on the swing part, in case many of you might have the doubt. Now, one concern will always be there: what happens? It can so happen that if we see a 1 or 2 days move as well, the swing might end up coming to 80. So at that point of time, we'll have to assess how the setup is and what is going on. But yes, that is what is happening on the swing front so far. Now, as you all might be aware that yesterday was the expiry, and post expiry, something interesting happened. Basically, you would see that the FI short positioning has uh, was 1,73,000 and 1,37,000 is the contract now. So you might expect that okay, short covering has started, but the funny fact is that when you look at the percentage long, okay, so basically it's the ratio of the long and short that you have. Now that has dipped to 9%. Okay, and I think the lowest that we have seen is around 8% or so. Sorry, I can see it over here, that is 7.75%. Okay, and yesterday's reading was 9.56% on the short side. So that sort of tells you the bearishness that is there among the FIs. And in the hindsight we can say that probably due to the tariff war and all, uh, these things are going on. But uh, somewhere if we look at the history, then even if you see the client long percentage, okay, that also has come to an extreme. And typically when the long percentage is very high, that's where there are good chance of a bottom happening, right? And that is what we are sort of seeing over here as well. Even for DIIs, if you see the positioning, uh, sorry, yeah, so even if you see for the DIs the positioning, I mean, it's still at the higher levels where typically the market bottom occurs. Okay, so there are many data points that are still suggesting that somewhere over here the bottom should happen. Okay, the confirmation point, as I told you, would be a break above this resistance zone. Basically this is where the highs and the lows are. So it is roughly, you can say that 25, 250 to 25, 300 sort of zone. That is the upside zone to watch out for. I think once this breaks on the upside, that's where all this extreme readings can start cooling off, and they'll get back to normal. And the other thing that we need to watch out for is the OIPCR, whether it is recovering on a sustainable basis. If it is recovering on a sustainable basis, then that will be an early indication that now people are more comfortable shorting put. So yeah, I mean, so this is what we need to watch out for. So these are few data points that I'm actually checking, almost every day and seeing how it unfolds. Uh, so yeah, that's there. And then I had spoken about yesterday that we'll be talking more about the FNO data. That is because the expiry had happened. I found some interesting things, but there was not much to take away. But nevertheless, I'll share to you all the observations that I saw. So for the people who don't know, on strike, basically, we give the views of a rollover in three ways. Okay. uh, See, one is the daily, then the expiry, and then the early positioning. So expiry and early positioning, these two gets updated only towards the end of the expiry. Okay, because these are all expiry special screen. So that's where now, say for example, so when it comes to reading, the way you can read it is that say for example, M&M, okay, and all these stocks. So that's where the rollover has happened high. Uh, Now, usually I don't look at this screen much, but I'm more interested in the expiry. I mean, in the starting open interest at the end of the expiry. Okay. Now, this is actually a very unique way to look at it. Many people are fixated to seeing rollover in percentage terms, but everything over there is relative. Over here, it's the starting open interest that matters. Okay. Uh, so then in this, basically, I had, I mean, I saw many good setups. So one thing that caught my eye was, Page Industries. That is because there is a 85% OI surge, and this was the lowest in the last 12 months. And after that, within one expiry, there was a very high open interest. Uh, and the prices was negative 3.79% for the expiry. Okay, so this might give you a sense that it is a short built up, but actually when I went and saw the data, okay, I mean, this is where you have to understand how to read the data. Okay, because you can see over here, it clearly indicates that the OI change was higher by 85%, but the prices are lower by 3.79%. So the initial indication will be that it is a short, but when I went and saw into the data, so if you go to page industries over here and click on futures, you will be able to see this screen. Okay, and then while digging deeper, I found out that these are actually all long built up that was happening. Okay, because you can see that open interest bottom out, say somewhere in on 25th of June. So 25th of June is 2506, right? So over here, initially it was long built up, long built up. Okay. There was some short built up as well, but you can see that during long built up, the volume change percentage was also very high. Okay, 140% over here, also almost 9% long built up, and the volume was almost around 133% higher. So, it sort of tells you that there was a lot of long built up that was seen in this. Now, I don't know why it is down today. This could be because of maybe earnings reaction or so. But what is happening is that over here, if you watch very closely, okay, the open interest is actually at a almost a record high. So whatever data that we have from 2015, it is at an extreme level. And actually over here, what is happening is that these were all long built up, and now the stock is down. So this is not really a good sign. So if I draw a trend line, okay, so basically, what is happening is that this support level could be, breaking on the downside with the gap. Now, this is future 1 month. It's better you see the spot chart. I usually prefer spot chart. Okay. So when we look at the spot chart, okay, so now we are not seeing those gap. That is mainly because I would be assuming that would be because of future premium discount that is going on. But you see over here, it is at an important support level, right? So if this breaks on the downside, then it may not be a good sign, because there is a possibility that this might end up becoming some sort of a double top, right? So this is one stock that you need to be watchful for, and it can possibly have some bearish implication. Now there is one more reason why uh, I specifically saw this stock, was because maybe 1 or 2 years back, if you see the bulletin board and insider trading within that, the promoters were coming and they were selling in the open market left, right, and center. Okay, and they were selling it almost at 44, 45,000 kind of levels. And that is where this stock had caught my eye, because there was a lot of insider trading that was happening, and mostly all of them were just checking out only. So that's where I even went and I saw their holding as well, the share. So you can see that it dropped from 46% to 40 to 43%. And of course, whoever knows page industries, I mean, the valuations have been pretty high, all along. So if you see almost a 70 to 73 PE. So when I think of all these things, it doesn't really give me a nice picture about it, and especially when now the FNO data is also suggesting that. So this is one place where probably one might want to be a little more cautious and watchful, and see how things are unfolding. The other one interesting that I observed was, I think it was Indian Hotel. So this stock also particularly caught my eye, because you can see that open interest is almost at a 12-month high now. the starting open interest, and there was a 27% surge in open interest, and the stock had gone down 5%. Okay. Now all this is happening, especially when Indian hotel is actually posting good results, but but despite the good results, the stock has now started to I mean, it doesn't give reaction to very very good quarters, but if it is even slightly bad, then market might not forgive, given the current environment. So you can see over here, basically it has, so uh, all of you, who have joined and they don't know, you can do a growth percentage YOY QOQ as well, and you can see that almost consistently it has been growing around 20-30%, and that is one of the reasons why the market is kind of favoring the stock. But in the past 2 to 3 quarters, if you see, the growth rate has been slowing down, right? And everything is like a rate of change over here. Even if you see the annual PNL, and I think if I do the growth percentage, so okay, so 25, so if we see year on year, there is almost a 50% growth that it has seen. And if I'm not wrong, it's trading at, yeah, 40-50 PE or so, 50 PE. So it is because of the growth, but you can see on a quarterly basis already, the momentum seems to be slowing down. Now, what particularly caught my eye was this setup. So as you could see over here, basically the open interest is at a 12-month high. There is a OI chain that is 27%, and the prices are down 5%. Okay, so that's where I started to dig deeper into this, that what is happening, and what I realized is that at the top, okay, the open interest was almost the lowest that it had seen in the last 2-3 years, and from there has been some built up. Now, why I'm specifically a bit more concerned about open interest being less on the top, that means that people who might have had position long or short, whatever, they would have cashed out, and from here on they were sort of neutral. And after that, when the downtrend happened, that's where we started seeing some built up. Even over here we started seeing some built up. So again, what I did was that I went inside the stock, Indian hotel, and I saw what's happening in the futures market, right? So I could see that long, short built up, short built up, short built up, short built up, and there are many places that are short built up. So we haven't seen very significant short built up apart from these 2 days, which were around 780, 765, and so on. But yes, I mean, these were the places where at least there was a 7-8% kind of short built up. So that is where now it is facing resistance. And if you see its chart, basically it is forming some sort of triangular pattern. Now we draw a triangle pattern from year to year, or you might want to narrow it down and draw from year to year. That is fine, but basically it is forming some sort of triangular pattern. And as I told you, why this stock particularly came to my eyes was because when you see the chart on the weekly chart, this was one stock that has been trading above the 40-week exponential average since 2021. Recently it had broken over here, but every time when I used to scan based on the look back period, the stock used to come in that category, right? But now what is happening is that it is sort of losing momentum. Even on the monthly chart, it is in sell. Now the 20-week average, the 20-month average, which is right now at 690, that is like an important support. If that breaks, then I think it can go for a good consolidation. So this is where my concern is. Now I'll tell you, I, I mean, I told you that why I was concerned about this. Now something very similar I had seen long back in Jubilant Food also. Okay, if you see Jubilant Food chart, what had happened was that in this entire up move, uh, you can see the open interest was going down, and at the top you can see that the open interest had come down very significantly. And then when the prices started to decline, the open interest started to rise higher. And for all of you who don't know, the stock eventually actually corrected 20-30% from the top. Okay, sorry, it is almost 50% from the top it corrected, right? So that's where the risk is, that when the stock's valuation is a little high, growth rates are slowing down, and you see the open interest at very lower levels. I mean, it doesn't usually end well. So that's where, I mean, we need to watch this very carefully, because somewhere over here it is forming a triangular pattern, and it is almost at an important support zone, which is around the 40 week. So if this trend line breaks on the downside, you need to be a little more cautious. Uh, because then what will happen is that the price correction, which is due for a long time, which it has not seen, and it had seen this secular up move, that can come into play, and that's where you need to be a little more watchful. Okay. So this was another stock that caught my eye. Then you would be aware that I was looking at some FMCG stocks, and and I thought that that is going to do well. In fact, FMCG index has managed to come up, but the issue is that it is only based on, I think, Unilever, who has seen a very sharp run up in the recent days. But other than that, it is not much. And so one more stock that caught my eye was basically United Spirits. Okay, so United Spirits, this is my interpretation, but you can see that over here the open interest used to be low, only 95-96 lakh contracts. And then this month there has been a OI change of 21%, and there is 8% decline as well, right? So when you see this stock, okay, United Spirits, so technically it has surely become weak. uh, in fact, I was looking at the higher time frame charts as well, and I could see that on the weekly and monthly, the stock seems to be breaking the trend on the downside. Let me open it directly into the stock page only. Spirits. So if you see the weekly chart, it is already below the averages. On the monthly chart, it has broken the 20-month average, this month, I mean, the July month. So the expectation would be that at some point of time, it might go towards the lower end of the channel and probably even test the 40-week exponential average. So that is in the near term. So probably some weakness can creep in, but maybe from a medium to long term perspective, you can keep this in your watch list. That is because the futures open interest have now started to surge higher, and and there is a significant open interest rise. So my guess would be that maybe in the near term, we might see those pressure kicking in for United Spirits, and maybe it can drop lower. But say for example, if you end up seeing open interest around these levels, right? If you see around these levels, and on the monthly chart or so, it is coming towards this lower end of the channel or so, it might end up becoming an interesting bet to watch out for, especially from a medium to long term perspective. Okay. Because I like this stock mainly because if you see the spot chart, mm, there there was a big breakout. Okay, yeah. So there was this big breakout that had happened after, years of consolidation, right? So if you see over here, after years and years of consolidation, this breakout had happened. So whenever such big breakouts happen, okay, usually they don't falter in a year or so. There will be up move, there will be pullbacks, and we might end up seeing these trends happening. But eventually, they should be they should do reasonably well from a medium to long term perspective. Okay, so that's where this stock caught my eye. And the other one, which I had been repeatedly mentioning, was all the tech stocks. So be it TCS, where we are seeing a massive surge in open interest. Infi, you can see 20 over here also 23%. Tech Mahindra 20%, Wipro same. Okay. In fact, Wipro is 65%. I just noticed it right now, but it is 65%. So all of this is the area where there is a huge shorting that has been happening. The only issue right now with the IT is that there are still no signs of a turnaround, because when we look at the IT chart, it is still struggling around the 40-hour exponential average, and it is not able to break that. Okay, so this is the hurdle. Even yesterday, when it saw pullback, it faltered around the 40, and now it is going back. So the Nifty IT index sustaining above the 40 would be the initial sign to watch out for. And then after, at least we can start anticipating some sort of pullback. Now, the reason why I told you IT is because the other thing is that it is almost around the 40-month moving average, which usually acts as a very, very good medium to long term support, right? So it is almost there now. It is reaching there. So need to see, and especially when it is coming to this important support level, the open interest is extremely high. So that's where uh, this can become interesting. And also the other thing is that many of the commentary, people are sort of writing off IT and saying that the doom days are gonna come and so on. Usually, when you have such thought processes, and when the open interest are at an extreme, uh, we do end up getting good counter trend move that actually surprises everyone out of nowhere. And later on the narrative starts building, okay, but AI is giving other opportunities and so on. I'm just telling you this from my experience. So let's see, let's be very watchful of IT, because because of the massive open interest surge that it is seeing. So I think these are the things. In fact, yes, DV, M&M was also one that I was checking, and in fact, in M&M there is a positive development happening, which means. So let me go to OI interpretation. So sorry, M&M was also one which I had found, and which we have been repeatedly talking about as well. So over here, see, the open interest surge had happened when we saw this decline, right? After that, we ended up seeing a good short covering rally. And over here, basically, the participation has been lackluster, right? Prices have gone up and down, but people have not done much in FNO. But recently, we have started to see some sort of long built up within this stock. Okay, and given that it is at an extreme, it is around this resistance zone. We need to watch out for this zone to break out on the upside. If that happens, I think that would be a positive development. That is because some bit of long built up is also there. And at this point, if you see in this decline, there was some short built up. There is some long built up over here. So basically, it is sort of a tug of war between the bulls and the bears. Uh, so if this breakout happens on the upside, I think there is a little bit of shorting which had happened over here. That might cover, and maybe the long built up which has happened, that can sustain. And you will ask me that whether I have seen such setups earlier. The answer would be yes. Many a times, there are two camps in the market. basically the bulls and the bears, and they fight. But eventually, you have to see what the trend is and where the breakout is happening. So something like that had also happened in Hind Petro. So if you see over here, okay, basically there was some sort of long built up that we saw during this phase, okay, which lead to an open interest rise till here. And after that, when the decline happened, this open interest surged further. So there was like a tug of war between the bulls and the bears. Eventually, you will see that when this high broke on the upside, right? It was almost around this point, and that's where actually the short covering started happening, and that led to a rapid move, in HPCL. So I'm not saying that you might get this furious move, but yes, I mean, because the open interest is not that extreme, and it doesn't show a lot of shots, but over here there were a lot of shots. And if you see the open interest of the in the past, so it had come to this extreme zone, like you see over here. So that was the I mean, that was the trigger for that stock as well, and eventually it led to a good move on the upside. So yes, I mean, M&M has an interesting setup. The only thing that is missing over there is a breakout, which we are still not seeing. So in M&M, you cannot say inverse HNS. Maybe you call it a cup and handle breakout, because inverse HNS patterns break, I mean, happens when there is a when the prior trend is down and the breakout is happening, but M&M is actually consolidating at the higher levels only. So maybe you can call it a cup and handle or something like that, or just a range breakout that can happen. So so yeah, that is what it looks like in M&M. Any other? Yeah, DV. So any other questions you all have? Kolpal. I think Colgate had seen a very sharp decline. I remember it had even broken the 40-month average, if I'm not wrong. Wait, let me just expand the screen and see. I'll also see it over here. What Colgate has done. 11% surge in open interest. So over here as well, if we see from the month, okay, one. So there has not been very significant surge, at least recently, but yes, there is still a significant surge. So let's see what's happening there. So yeah, we have seen a waterfall decline over there. But if we see the monthly chart, so this is what I had seen actually, the 40-month breaking on the downside. So that is not really a good sign, but can this be a false breakdown? Hmm, I don't know. If we look at the channel, it has not even touched the lower end of the channel. Hmm. So, at least these averages needs to break on the upside. Till then, there will always be that fear that, can the decline continue? And if I have to see the options, sorry, the futures chart of that. So yeah, the open interest is definitely at a higher level. Mm, It's in fact at an all-time high. I'm just trying to find out where is the reversal point that can happen, if at all it has to happen. So it has even broken 61.8%. Sometimes, some stock they do halt around 66%. Let me see where the 66% is. Okay, it is very close by. So yes, I think this can be one interesting stock to watch out for. Even I'll try to follow this stock. Um, but yeah, the whole idea is that maybe wait for a while and for some confirmation. Basically, you would want this averages to be broken out on the upside, because this bullish crossover might lead to an up move till year or year. Maybe that is the short term punt that you might want to take, but we need this breakout and Colgate sustaining above this trend line. That's where we can say that there are initial signs of a turnaround. So yeah, those are the initial thoughts. So uh, Keynes actually had come on my radar. I think when I was checking the volume buzzer, there is not much to talk about it in. I mean, when we look at the open interest, because it is very newly listed, and usually for such stocks, I don't look at the open interest. Uh, but when we see the stock, I mean, the setup does look interesting. That is because of the up move that we have seen over here. It was consolidating and it is trying to break out, and there was a bullish crossover. So the setup does look interesting. Need to see how it unfolds. But probably the risk reward is not that great. Maybe if it goes above a bit, then it pulls back. There might be some opportunity. But yes, I mean, if we look at the long term charts, they are very good, because it has been rising higher. There was some bit of uh, price. There was some time when the prices were below the 40 week, but then it has bounced back very strongly, and it seems to be doing well. And in fact, on the 20-month average, it took support and it is rising back. So that way, the trend is pretty strong. So yeah, need to see what it does. But basically, from medium to long term perspective, this low of 5400, that becomes an important support level. Now 5400 is like 9-10%, I think, almost a 12-13% away from current levels. Maybe at pullbacks it might offer some good risk reward, but at this point of time, it is definitely worth keeping in the watch list. PSU banks, I am not tracking PSU banks much, but if I just see the chart, the weekly is in sell and it is taking some resistance over here. So this is not a good sign. What it is doing in daily has broken 40. Wait, let me also check what it is doing in RRG. That might give a very good sense. Okay, PSU Bank. Okay, so there you have it. I mean, it is probably going to enter the lagging quadrant today. What is it in weekly? So in weekly as well, there is some signs of momentum turning down, and you saw that on daily. It is going into lagging. Maybe you might want to wait for some reversal and not try to preempt a bottom. So yeah, I think that. So Himanshu, we have mentioned earlier that before strike, Sir had coded RMI on TradingView, so that's how we have it. But I mean, it is not available for the users to use it. So yes, I think it's 11:40. So I think we can end the session today. You know, Unfortunately, the Nifty is still not giving us any decisive move as such. But let us see. I mean, the only thing that is there is that if this low breaks on the downside, there is a risk of a correction till this point. I mean, that is something that we need to keep in mind. But yeah, that's about it. I think, on the upside, somewhere around 25,000 levels. I mean, that is the initial resistance level, right? So this is where it is. I mean, 25,000 and around 25,250 or so. These are the two major hurdles that Nifty has on the upside, and on the downside, 25,600. So which was around this low, and 24 440 450 or something like that. That is an important support on the downside. So let us see if we manage to get some direction. But yeah, I mean, the only the sad part is right now that despite the Nifty not moving higher, the swing has risen higher, and this, if at all the low breaks, then this gives some room on the downside for the swing also to go. So that's where this is what I was talking about, that when uh, the swing gets into the oversold zone, there is typically some sort of pullback that happens now, that can be a pullback or a sideways consolidation that allows the swing to also rise higher. But yeah, I mean, all this is happening below the 40-day exponential average, so that is not a good sign. So this now becomes an important watching point, 24,598. I think if that breaks, then we need to be open to correction till 24,450 or so, and then see how the data point behaves. Okay, so that's what we have for today. Let's meet on Monday and see what it does. So thanks everyone for joining, and see you on Monday.